Hello, this is Manesh Patel with EII Capital Group. Today is June 27, 2010, and this is the Ichimoku analysis for the US stock markets. Just like normal, we're going to go through our normal disclaimer. This is for educational purpose only. All charts are either in Thinkorswim and TradeStation and/or. Here's my contact details. If you have any questions or anything at all, you could go to eiicapital.com and pretty much post your questions there. Go to Ichimoku resources. You could read up on more on Ichimoku there. You can see our blog. We also have a book that just came out last week. You can see information there, and we do have a book section there too. So there's a lot of information here at EII Capital. From here, you could go to all our other websites too. Okay, let's jump straight into the charts. What we're going to do is we're going to look at the ES. We're going to look at the ES mini futures. And the first thing we're going to do is we're going to go to a weekly time frame. And we're going to zoom in. Okay. And if you look last week, if you read the video, pretty much we had said the ES futures, which are the E-mini S&P futures, pretty much are consolidating, and we drew these two lines, which were pretty much showing you the barriers, the upper resistance and the lower support values. And you could see that last week basically we went as high as 1129.50, so we went 4 points above our little barrier that we had, and pretty much bounced off there and pretty much closed lower for the week. So this consolidation pattern is pretty much holding. This week it's going to be key to see what's happening. As you can see, the Tinkinson is kind of starting to move, went below the Cajun-sen, so that's a little bearish indicator. Okay. However, price is still above the thick cloud, so we don't know what's going to happen. Also, the Chicago has now gone bearish too, and also gone past the Tinkinson line here. But you know, there's a lot of mixed sentiment on the weekly time frame, because you got the future Kumo cloud is bullish, price is above the cloud that's bullish, the Tinkinson Cajun-sen is bearish, and the Chicago is bearish. So you got conflicts all across the board. So really, this thing is just going to tell you, it looks like you're going to consolidate. And now it's kind of key to see what's going to happen. Either we're going to go back above this 1125 barrier, go there, or we're going to come down to the 1035. This week it's going to be kind of key to see what happens. But either way, it just looks like we're just going to consolidate for a while. Let's go look at the daily time frame. Here's the daily time frame. And I'm not sure if you remember, 1125 and then 1035. So if you look here, we pretty much came all the way up here. Okay. And we came up here. This is the daily time frame. Oh, nope, this is not the daily. I wonder why it looked a little weird. Okay, there we go. This is the daily time frame. You could see that we came all the way up to here, which is the 1029 value. We pretty much went above here. This went pretty much, we moved above the Cajun-sen, so that tells us a possible trend was changing, a pullback was about to occur, and then we went all the way down. And you could see right away there's conflict, because the Tinkinson is above the Cajun-sen, which indicates bullish, but price is below that. So the Tinkinson did not follow price at all, and the Chicago is basically in price. So this tells you alone that the daily time frame is also in a consolidation pattern. Let's go look at the SPX. Okay, this is the SPX. It pretty much follows the E-mini S&P futures, as you would believe, but sometimes the cash index is a little different. Let's go look at the weekly. Weekly shows you the same thing. Okay, now let's go look at the NASDAQ. A lot of people like the NASDAQ, especially because it kind of was a leading indicator when the market started going bullish. If you look at the NASDAQ, this is a weekly time frame. We're zooming in. This is still very bullish. Price is now pretty much closed below the Cajun-sen. Last week, the week before that, it was above the Tinkinson. Now we closed below the Cajun-sen. The Chicago's in price. However, this weekly time frame is still very bullish. Okay. And if you look over here at the daily time frame now is starting to show. And we went above the cloud, poked above it, and then came all the way down to the Cajun-sen, pretty much here. And now if the NASDAQ starts showing a pretty much another break for the cloud, there's a high possibility that this thing may start taking off and go to about 2013. Okay, so if you are going to play anything bullish, I definitely would play a stock in the NASDAQ compared to the S&P. Okay, let's go look at the Dow real fast. And it's popping up here. Let me see. Indexes. There's a NASDAQ. Let's just look at the Dow. For some reason, the Indu is not in there, or mistyping it. Anyway, so if you look at the NASDAQ, I mean the Dow, pretty much you could see that okay, if you look at the Dow, basically you could see that this is bearish. It's not like the NASDAQ at all, where it's above the cloud on the daily. And then let's go look at the weekly scenario. It looks a lot more bullish than the S&P. Okay, on the weekly. However, you still are bearish here. So definitely, I would, if you're going to play anything to the bullish side, I would pretty much look at the NASDAQ. And if you're going to play anything to the bearish side, look at either the S&P or Dow. But I would be very, very careful playing either one right now. Reason why: there's no trend in the market in general, in the U.S. markets at all. So keep your risk very low. Take profits when you can, if you get them, and so forth. Okay. Again, this has been Ash Patel from EII Capital Group. If you go to eiicapital.com, you can get to all our resources, and also you can post questions on our forum for anything on the video. Thank you, and have a nice week.